What is the metaverse? Is it Google? Is it virtual reality headsets? Is it Facebook? Why are NFTs relevant to this discussion? Well, for me, the metaverse at the most basic level is actually the internet and the digitalization of our lives. We're spending a greater portion of our lives interacting digitally, a trend that is overwhelming and consistent since the advent of the World Wide Web. Our lives are digitizing in effect. So the question then becomes, how do we own and interact with our digital possessions or our digital objects? The current trajectory is that our digital objects are trapped in the walled gardens of large multinational tech firms. You don't own your data or your Facebook profile or your Twitter handle or the in-game item you purchased in Call of Duty. So enter NFTs or non-fungible tokens, which are a standardized, interoperable, portable, decentralized, self-sovereign, user-controlled, cross-application method to store any digital object. In other words, NFTs are the first time individuals can truly own digital objects. And while we're seeing the first iteration of NFTs through digital art and collectibles, it's a much, much bigger idea with far-reaching consequences and implications for how the internet will operate in the decades to come. My name is Mitch Michigan, and I'm a partner at Blockchain Coinvestors. Thank you for joining today's webinar, What are NFTs? First, however, as always, I have to show you this disclaimer. While we are an investment firm and do offer investment products, nothing here should be construed investment advice. This webinar is purely for educational purposes only. Here at Blockchain Coinvestors, we are an integrated investment platform operating since 2014. There's three main areas in which we invest. The first of which is a family of funds. Through these funds, we're investors in about 40 of the leading blockchain VCs. We also have two direct investment vehicles, the first of which is our early stage token fund, which takes stakes into token projects before those tokens go live on mainnet, so before you can buy them in Coinbase or Binance. And then finally, we also have a mid-stage growth fund, which invests directly into the growth grounds of emerging category leaders and unicorns. Briefly, a bit more on the structure of the fund and the platform. As I said, we have three fund of funds, the first two of which are the top performing funds in their category, according to Preqin and PitchBook. We have an early stage token fund. The mid-stage growth fund builds on more than 10 SPV investments. So it's the same strategy, but it's been spun out into its own direct vehicle. And then finally, we also operate the largest and most well-capitalized blockchain-specific SPAC, which trades on the NASDAQ under the ticker BCSA. So a bit on our strategy. We intend to invest in a majority of the emerging blockchain unicorns on this sector shift, this nascent technology. So if you look at mid-year of this year, so in June of this year, we counted approximately 90 enterprise unicorns. So that's your standard equity debt cap structure with equity valuation in excess of 1 billion. We were investors in about 64% of those projects. Similarly, if you look at the crypto projects, so tokenized projects, there are about 50 projects with equity valuation or with token valuation in excess of $1 billion US. We were investors in about 56% of those. Finally, just on the three open funds, here are the terms. We won't go through all of them, but these are the open funds. If you're interested and you are an accredited investor or qualified client, feel free to email us at ir@blockchaincoinvestors.com. We can get you further information. And if anyone is curious in hearing about our portfolio, please head to our new portfolio section, blockchaincoinvestors.com/portfolio. You can see what we're invested in. So as you heard, NFTs, it's a big idea with far-ranging implications. And really it comes down to digital proof of ownership. So this has started with art and collectibles, but extends to any asset which can be digitized. And as you'll see, we at Blockchain Co-Investors also think NFTs are a key pathway for broad blockchain adoption in a digitizing world. So the metaverse, well, if you read Neil Stephenson's Snow Crash from the late 1980s, where the term metaverse was coined, there it was, an all-encompassing digital world that existed parallel to the physical world, a bit like the internet. But more, modernly, we see movies like Ready Player One, and kind of the traditional conception now of the metaverse is an iteration of the internet with an immersive virtual world, mainly facilitated by VR, AR headsets. And of course, underlying this vision of the metaverse are the large multinational US tech companies. Microsoft has gotten to the space with its acquisition of Activision. Facebook, of course, changed its name from Meta. And, alongside Google and some of the other names there, are developing their own VR headsets. But I argue the metaverse is already here, and it's coming with a drip, drip, drip. It hasn't come with a big bang. We're already entertained online, more and more so. Of course, we continue to communicate more digitally each year. We all know that we socialize online more and more. This is also particularly evident with the newer generations. And then for those of you who don't know, people are competing and playing sports online to a much higher degree. The games Fortnite and Dota 2 are two of the largest sporting events in the world. The Fortnite Championship is actually held at the US Open venue at Flushing Meadows, and the winner has a larger cash prize than the male singles winner of the actual US Open. And of course, they have millions, not billions of viewers via applications like Twitch. So also competition in sport is becoming digital. And then, as you all know, post-pandemic, we are increasingly working online. So again, as you heard up front, our lives are digitizing. This is the overwhelming trend that we are seeing. And so our current trajectory, our iteration of the metaverse, is that we're forced to operate in the walled gardens of these large multinational tech companies. And so what does that mean? It means our digital interactions, data, purchased objects. In effect, these are actually the property of these companies. So your YouTube subscriber list can't be exported, your Facebook profile, it's stuck in their system. Our data, our supposed owned objects are actually hosted and stored on these companies' large servers, often on AWS. So because of this, we actually have to trust these companies to continually make available all of our digital property. And because these companies are in fact the true owners of these digital objects, they're able to analyze, mine, and profit off of their consumers. Their consumers actually in effect are the products. So again, you can see that Meta and Google are really leading the charge in this regard. The alternative is a open public blockchain-based metaverse where you can move assets in and out. There are no walled gardens. The systems are interoperable, and they're actually user-owned and controlled. So you can self-sequester your own data, your own digital objects. And so enter blockchains such as Ethereum, but also centralized companies such as Dapper Labs or Animoca, two portfolio companies of ours. They're building on top of these public open-based systems. So it's not the elimination of private companies, but rather the rails upon which the internet actually operates. And I just want to double click on digital property rights because that's where NFTs come into play. So for us, the metaverse doesn't start actually in virtual reality. It starts with the ownership of assets, the ability for anyone to create and trade value. So VR, AR, all this will also come into play in the metaverse as that technology develops and becomes more accessible to consumers, but really it is the ownership of assets. So enter NFTs, a new digital primitive. So non-fungible tokens are simply a digital primitive which confers ownership on the internet. As Chris Dixon, the GP at Andreessen Horowitz, stated, for the first time, users can genuinely own digital objects. So this is a big idea. So what exactly are these NFTs? Well, again, they're non-fungible tokens, which we'll talk about on the next slide, representing this proof of ownership. And importantly, they're auditable via the blockchain. So they operate on blockchains. They are another token that is traded and settled on public blockchains. There's three key properties to note with NFTs. The first is that they're indivisible. Unless you've programmed to be divisible, no one can break them down or destroy them. They are provably scarce, so you can audit whether or not they have been copied or the original. And then, of course, they're unique, which we'll talk about on the next slide as well, but you can identify and audit and prove via the open source code that the one supposed version of your NFT is in fact the unique version of that NFT. So non-fungible tokens get its name from fungibility, and it's really the same concept as in the physical world applied to cryptocurrencies or tokens. So fungibility is a concept in economics, and it's very easy to understand with a real world example. Say you have a $5 US dollar bill, your friend has a $5 US dollar bill. It does not matter which $5 bill you have, you can swap them, and in effect, they have the same value, right? So it does not matter which dollar you have. The same concept would apply to Coke cans or Sprite cans. It does not matter which one you have. This contrasts with items that are non-fungible, where it does matter which one you have. So baseball cards is a good example, right? While you might have two baseball cards, they are both baseball cards. If one is a Mickey Mantle card and the other is a Ichiro Suzuki card, they're very different. So it matters which one you have. Artwork is exactly the same, right? You can have two paintings, they're both paintings, but if one's Picasso and the other was painted by me, very different. So it matters which one you have. The exact same concept now applies to cryptocurrencies. So on the fungible side, you have cryptocurrencies like Bitcoin. It does not matter which Bitcoin you have in your wallet, all Bitcoins are the same. So it doesn't matter which one you have. Very similarly to the non-fungible example I stated before, CryptoPunk 115, which is one of the original CryptoPunk NFTs, which is quite popular in the Ethereum ecosystem, actually pertains to a very specific token that can be identified. So there's only one token which pertains to CryptoPunk 115. And if you don't have that token, you don't have that CryptoPunk or any of the benefits that may come with owning that CryptoPunk. So what are some of the benefits that NFTs then offer? Well, you've heard it, but I'll just double click on it. They are transparent and auditable. So we have open source code that allows for anyone to prove that your NFT is legitimate. The potential for self-custody. So just like all the other cryptocurrencies you have, you can obtain a self-hosted wallet and actually store your own digital objects, your own NFTs in your wallet. So you won't need a bank or any other sort of custodian to hold those objects for you. You can hold them. And because NFTs are tokens, they may be transferred in a decentralized peer-to-peer manner on public blockchains. So they're easily transferable, and this opens up a whole range of possibilities in terms of economic consequences that have to do with assets that were previously very difficult to transfer. But there are risks, and this is a nascent technology. So new users are susceptible to fraud. So while this is not investment advice, I would point out that scams proliferate in the NFT industry. So it's very important to do your diligence on a particular project and make sure you do understand what you're buying, and what you're buying is in fact the NFT that the people selling it say it is. We have the potential for wash trading. So because you can self-host these NFTs, right, you could theoretically control two of your own wallets and transact with yourself. So sell the NFT to yourself, therefore creating the illusion of a sale or an increased volume or an increased price in a certain project. And then finally, we have scaling issues and the centralized hosting of data. This one is a issue because of the youth of the industry. So right now, the cost of storing the NFT data, depending on the type of NFT on chain, is quite expensive. So many times NFTs are actually just containing a URL link, which then goes to a website, which is pulling from a centralized server such as AWS. And that server is holding the image or the artwork or the music file or whatever it is. So this is something to look out for. This does not apply to all NFTs. Again, CryptoPunks, notably, all of that image data is actually stored on the Ethereum blockchain. So there are some that's stored on chain. This is also an issue that I think will go away as some of the scaling solutions become more developed than they are today and more widespread in their use. So what about the current market, early examples, and industry leaders? Well, as you heard me say upfront, this is a big idea that pertains to a lot of areas that have not yet been fully explored. That being said, there are some use cases occurring today that we wanted to touch on, and collectibles and art are clearly the two largest at this current juncture. So just like with trading cards or Rolex watches, for people operating in a digital ecosystem, they like to collect certain digital objects. And so we've seen many notable brands, which we'll talk about later in the presentation, come into this space and start selling NFTs. So one notable example is NBA Top Shot in their partnership with Dapper Labs. They actually were able to create NFTs out of viral moments, video segments, and sell those off to NBA basketball fans. So that's one example. We also have many digital artists now posting their art in terms of NFTs and selling it that way. A very interesting segment that is growing is actually NFT-based games. So for some of you who don't know, in-game economies, purchasing items in-game or tokens or clothing or guns and Call of Duty, this has been something in the gaming sector for a decade or longer. And so now games are starting to make those items actually NFT based. So that way you can move those items theoretically in and out of that game universe or do whatever you want with them. We've also seen content and media NFTs start to pop up. So music NFTs, but also social media NFTs. A notable example is that the very first tweet by Jack Dorsey ever was turned into an NFT. So we're starting to see that space explode. And then also, just want to point out again that the constraint here is that the item has to be able to be represented in digital form. So we're seeing startups in terms of domain names, carbon credits, data storage, real estate, clothing, shoes for your avatars. Really, the sector is exploding. It's incredibly new. And so we don't know exactly where it's going to land, but that we know that a lot of activity is happening. And behind, the actual individual products and projects, there's a kind of robust ecosystem developing. Many of these companies are portfolio companies. So you've seen several gaming studios or brand partnerships pop up. We have infrastructure companies that are building the exchanges, allowing brands to come in. We have actual games developing around them. DAOs or decentralized autonomous organizations coming together to actually purchase them. NFTs are being used in DeFi, again, very preliminary, but as sort of collateralized lending. And then, of course, the marketplaces, which we'll talk about, that are actually facilitating the exchange in this ecosystem. So we're seeing that the sales have concentrated heavily in the quote unquote blue chips in the space. And so you can see on the left, but also, on the right, the left is by quarter, the right is, all time as of 2021. The various selling volumes for individual projects. So it's at the project level. Again, it very much is going to concentrate in some of the kind of the big names in the space, most notably CryptoPunks or Bored Ape Yacht Club, but also Art Blocks or NBA Top Shot or The Sandbox. Most notably Beeple, who is a long-standing digital artist known for his everydays. He packaged together 5,000 of his everydays and sold it for the largest NFT sale ever, which at the time was valued at $69 million US. So we've seen some very large sales, but again, they tend to concentrate now, as you'll see, in collectibles and art, and really at the top end of the ecosystem. In terms of marketplaces, so these are your kind of standard equity, debt, cap structure companies, centralized marketplaces. There's a lot of activity happening on them. And so OpenSea, with a valuation excess of 10 billion, potentially exploring a public listing, is kind of the brand name in the space right now and known for having the most activity and most volume. But there's several others. You can see the main chain upon which these operate, which we'll talk about in the next slide, but really it's still Ethereum based, but you see Binance Smart Chain there as well as Wax. And there are some attempts, though none super successful yet, to create a decentralized marketplace, but really still most of the activity happening on the centralized marketplaces. In terms of the chain, you can see on the top there, NFT trade volume by chain. Again, it's far and away on Ethereum. Ethereum really is where most of the innovation, at least at the beginning of last year, occurred. So that's where Bored Ape Yacht Club or CryptoPunks lives. However, Solana in particular has started to see a lot more adoption, just based to lower fees. So Ethereum's had a lot of fees, a lot of scaling issues, and so other chains are starting to pop up and take some of that market share. You can see on the bottom as well that most of the volume we're seeing, as I had mentioned, is in terms of art and collectibles. So again, still early days. The initial examples we're seeing are not as innovative, but it really started to also see that gaming come in there as well, which is a new development. So we're turning to the question at hand. Why is this all important? Why are NFTs important? Why should you care? Well, at Blockchain Coinvestors, we believe blockchain is a true horizontal. So it's going to revolutionize several industries, if not every industry. And central to that thesis is that blockchain allows for that direct peer-to-peer digital interaction, but also the promise of individual sovereignty, not only of financial assets, but also personal data and other individual resources. And so again, you see that NFTs really are the first time, technologically speaking, that you can have that individual sovereignty over anything that you own in the digital landscape. So you're able to own digital objects, digital items, and not only own them, but once you have custodized those digital objects, also transact in a peer-to-peer decentralized manner on open public blockchains. So very important to this thesis is the technology behind these NFTs. Similarly, we have 8 investment themes at Blockchain Coinvestors, and NFTs remain one of the most promising use cases that we've seen develop so far in terms of widespread adoption. So again, looking at that top left up there, content, gaming, social, these are all going to operate via the NFT technology on top of NFTs. And as you'll see on this page right here, the consumer adoption and brand adoption has just been stupendous. These are all from 2021, just a small percentage of the world's leading brands who have come in and started to play in the NFT ecosystem. So lovers of these brands will be able to buy, and already can in many of the cases, if not all of the cases, NFTs from these brands. And so just like 10 years ago, when every company needed to have a social media strategy, and 15 years before that, when every company needed to develop a web-based strategy, already today, every major brand needs to develop, if they haven't already developed, an NFT-based strategy to connect with their fans and with their consumers. So for one example, Louis Vuitton, they launched a video game called Louis the Game to celebrate the company's 200-year anniversary. Taco Bell has released NFTs. Nike has released digital shoes as NFTs. So you can see why that in 2021, there was about 20 billion in volume in NFTs. So this is already here, and this is already pushing the consumers to blockchain adoption, even if they don't know it. So rounding out the presentation, again, the metaverse at its most basic conception is the internet, the digitalization of our lives, and our lives are digitizing. So the question now is how are we going to own and interact with these digital objects? And so we could go down the current trajectory of walled gardens of large multinational tech firms, where you don't own anything in the digital landscape, where you're stuck inside their sequestered systems. Or you could use NFTs, the standardized, interoperable, portable, decentralized, self-sovereign, user-controlled cross-application method to store any digital object, a digital proof of ownership. And so while it's starting right now with art and collectibles, as you've seen where most of the market is, this technology extends to any asset which can be digitized, and in fact already represents a key pathway for broad blockchain adoption in a digitizing world. Thank you so much for joining me on today's webinar. We are Blockchain Coinvestors, the best way to invest in blockchain businesses. We hope you join us again soon.